we have a surprise quiz, test, quiz. But it's really easy, okay? This is a very easy test, and there's only 30 questions. And I'm expecting at least 25 out of 30. I could be generous, I'm expecting at least 22 out of 30. Okay? So, if you can all get your phone out, and go to that link, please. And bearing in mind, when I did a test run, I just clicked the same answer for every question, and that came to 11 out of 30. So you can't just luck it. So when you open that page up on your phone, it will basically, it's like a Google form, and on the questions you can choose A, B, C, or D. So you've got a sorry?
You need a QR code.
Oh, I'm not that fancy. And then, yeah, you have a 25% chance of guessing the correct answer. Or maybe a third, because there's always one bullshit answer. Option, I meant. I'll just wait till everyone's... So open up your browser, realistictrader.com/CUDL-quiz. Everyone got it up? It's an easy quiz, don't worry. I can help, Anita, if you wish. Do you need a hand?
No.
Oh, good. You got it? You in? Everyone in?
Yeah.
Right. Oh, wait, just waiting. One more. Well, this is easy if you've been in RT and you followed stuff. No, it's November 2025. Okay, let's crack on. So question number 1. Identify the correct definition of a stablecoin. A cryptocurrency pegged to the value of fiat currency. B, a government-backed crypto used for international trade. C, a crypto secured by physical assets like gold or diamonds. D, a type of token used for voting in decentralized autonomous organizations.
This sounds like the KYC.
Yeah. That's so true. And then when you get the answer wrong, it tells you the correct one to click. And do you need the link? Have you got?
Need Wi-Fi.
Oh, Wi-Fi. Fair enough.
Link next. I got the
I'll get the there we go. Do you have the? So if you open up a browser, yeah, you're connected already. Yeah, you're correct. So you just open up a browser. So that's it. That one there, and then up here. Oh no. There we go. You're in. So put your name in, and then the answer for question number 1. One sec. I don't want to leave anyone behind. All good? Question 1 done? Cool. Number 2. Impermanent loss in liquidity pools occurs when A, token prices stay stable. B, price of one token in the pool rises significantly more than the other. C, fees from trading activities outweigh impermanent loss. D, the pool reaches its maximum capacity. Maybe that is a cheeky one. When dynamic tau comes out, liquidity pools and impermanence loss and all that sort of stuff will be more prevalent. We did a lot of this back in 2021 with the rebasing DAOs and stuff on the phantom chain, and yeah. Question 3. On-chain analysis of transaction volume can indicate A, whale movements and potential market manipulation, B, retail investor activity and market sentiment, C, overall network activity and transaction fees, D, all of the above. Next question. 4. Which country was the first to officially recognize Bitcoin as a legal tender? A, Canada, B, El Salvador, C, Switzerland, D, Chile. 5. What's the max confirmed TPS that the Bitcoin network can handle? A, around 3, B, around 7, C, around 12, D, over 20. Don't worry, there won't be any naming and shaming afterwards. Number 6. Over the next 20 candles, is this bullish or bearish? 50-50 here. A, oh shit, A is bullish, B is bearish, sorry.
And that's a cryptocurrency.
Yes. I'm not going to say which one or when. Bullish or bearish, so A bullish, B bearish, apologies. Number 5, yep. Number 5 is, what's the max confirmed TPS that Bitcoin can do? A, B, C, D. Number 7, Casper does almost instant transactions, but roughly how long does a transaction take to reach finality? Sorry, I'm in your way. Number 8. How long does Bitcoin take to emit one block? Number 9. How long does BitTensor take to emit one block? Number 10, after the Bitcoin halving in April, oh dear Lord, what will be the new emission rate? Sorry about the typo. That's a late night slide, that. Andy, I remember doing this quiz that night where I said I couldn't play COD. Number 11. How many subnets are on the BitTensor network? I understand for the newer people here, this quiz will be quite hard. Sorry?
Not just the new ones.
12. Which exchange consistently has the best order book depth for CAS and TAO?
Lately?
Yeah, and historically. 13. Statistically speaking, if an asset is in an overall uptrend, but then paints a high test, this is a $14. Over the next 20 candles, is this bullish or bearish? A is bullish, B is bearish. Over the next 20 candles. $15. Which moving average crossover signal typically indicates a potential bullish trend? It's not one that we tend to look at with RT, but the rest of the world tends to. $16. If Bitcoin is $40,000, what is the rough percentage increase since first real market price discovery?
What's the best real market price discount?
$17. Which on-chain metric provides best insight into overall network activity? $18. Choose the correct statement about blockchain scalability and solutions. $19. How many Satoshis in one Bitcoin? $20. What is the average cost of a Casper transaction? $21. What is the primary difference between a layer 1 and layer 2 solution in blockchain? 22. Over the next 20 candles, is this bullish or bearish? A for bullish, B for bearish. '23. What is the Byzantine general's problem, and how does it relate to blockchain? '23. 24, sorry. In the Ethereum network, what is Gwei? '25. What does sharding refer to in DLTs? '26. What is the primary purpose of a consensus algorithm in blockchain? '27, we're almost there. How does the cryptographic hash function contribute to DLT security? '28. What is the formula for expectancy? I literally gave it to you earlier, and every other cuddle. Ready? 29. This is a practical application of expectancy. You have the option of picking a scratch card. Which one pays out the most? I'm not asking which one you should pick, just which one pays out the most. Which has the highest expectancy? Or technically, the highest expectant value. You have 4 free scratch cards. You can choose one. Next question. Last question. You have the option of picking a scratch card. Which one should you pick? The clue there is you have the option of picking a scratch card. And then submit, yeah? And then whilst you're all submitting, I'm going to get the answers. Number 18. Which on-chain metric provides best? You good? So, 7.
That's his excuse. I've heard this
18. Cool. So, 8. Any other question requests? 16. Right, just bear with me one moment, folks. Here we go. Sorry, I'm just finding the answer sheet. One second, here we go. Right, what I'll do is... Sorry? What, you want question 19? Okie dokie, let's go through the results. Everyone, if we just if we can just be a little bit quiet just for the moment. What I've done is I've minimized everyone's names because I don't want to do blame and shame, name and shame, etc. But I'm just going to, you can't read these, can you? No, I'll make them smaller just in case. Right, so here we have the scores. Wow. 20, 20, 28. Who is this legend? Lewis. Wait. Have you seen the answers before?
I didn't know most of the answers.
You guessed. Did you really?
I guess most of them, yeah.
Wow. Wow. Okay, so we have 2 23s. You guys are the winners here. Danny the Dabbler. You're Danny the Dabbler. And Greg. Okay, that's great. Oh, sorry, wrong. Sorry. I'm going to hit someone here. Sorry. Yeah. What's going on here, guys? Sorry?
Was it 25 you were hoping?
I was hoping for more than 25. So I see this as a failure on my behalf, not your behalf. Just curious, who got the worst?
My thing set something. 26 on the phone.
Fair enough. Right, okay, so I want to go through the questions, okay? Let's go through them. Now, the main reason I did this is because I had a chat, oh God, this was months and months ago, and it was with a random person online, and I can't remember what they asked. They said, why do you like this so much? Or no, why is this not a scam or something? I read the white paper and went, this paragraph. I just copied and pasted the paragraph to this person, and that paragraph explained was the answer. That's all you needed to read. And he basically said, oh, that doesn't explain anything. And instantly I realized this person had no tokenomic or blockchain understanding. And I realized this person will never understand the answer because he just doesn't have the prerequisite knowledge. And therefore, having at least a base level of tokenomic or blockchain DLT understanding will help you understand white papers a bit more. So when you're jumping into a new project and you're trying to scope it out, is it a good one or not? The higher prerequisite knowledge that you have, the more likely it is that you're not going to expose your money into something quite dodgy. Now, that's not always going to look after you, because what's happened over the last, this really helped in 2017 up to 2021, but these days, new projects come out with white papers, they tend to just bamboozle you with maths. So I read the white paper for BitTensor and Casper and all that, and you sort of vaguely understand what it's saying, and then you have to use AIs, and literally to get through the Ghost DAG paper for Casper, I literally had to copy and paste like little paragraph by paragraph, put it into Google Bard and went, what does this mean? Treat me like an idiot. Treat me like a bigger idiot. And until it put it in simple, like normally if you say, explain it like a 5-year-old, it really gives you easy. So I had to do that. So when you have a really scientific white paper, you just got to spend the time going paragraph by paragraph, making sure you understand it. And also, it would just help in general. So, the results are in. No, it was that one. I had 2 outcomes. So, number 1, identify the correct definition of a stablecoin. You should all have got this right. It's crypto pegged to the value of a fiat currency, typically the dollar. Most stables are connected to the dollar, but there are other stables that are connected to another fiat, but yeah. 2, impermanence loss is in a liquidity pool is when one asset is either goes too high or too low. So in this answer, it's B. So I think one of the next trading pubs, I have to go through this a bit more. Because we're not playing with anything at the moment. We're not playing in any liquidity pools, well, I'm not, and therefore the community. But when dynamic TAO comes out, and each subnet has its own dynamic TAO token, or subnet token, there will be LPs. We'll need to get shit on that. Shit on that? Get our shit read up on that, or whatever the saying is, you know what I mean. Number 3, on-chain analysis of transaction volume can indicate all of the above. Yeah. 4, El Salvador, first country. What a country. Hopefully we see those volcano bonds coming online properly. 5, the max confirmed TPS for Bitcoin is 7, but it averages around 3 TPS. Over the next 20 candles, you should all have instantly recognized what chart that was. Yeah, in November. I was going on and off about, about the flat top compression, and then we saw that. Number 7. Casper finality, 10 seconds. See you, mate. Sorry. No, that's right. 8. How long does Bitcoin take to emit one block? 10 minutes. Every 10 minutes. Casper is 1 block per second. Bitcoin is 10 blocks a minute. No, sorry, 1 block every 10 minutes, sorry. And BitTensor is 12 seconds. So very similar emission schedule, except it's 12-second block rate. After the halving, it will jump down to 3.125 blocks, Bitcoin per block. And obviously every halving, well, it halves, right? And do you remember when I said that last Bitcoin to be mined? It'll take 100 years to mine the last Bitcoin. That's crazy. So the year 2140 is the last ever mine done, which means the year 2040 it will begin mining that very last Bitcoin. It's nuts. 11, how many subnets on the BitTensor network? 32, yeah. And there will be more. 12, Mexi has most depth for those two. 13, statistically speaking, it's a nothing signal. Most of the internet treats it as a reversal signal. They're like, the internet will say, oh, it's a rising star or some sort of hammer fist pattern or some bollocks like that. It means nothing statistically. Halos are the statistically correct way to do high tests and low tests. So in an uptrend, you need to look for a low test for a continuation. Next 20 candles. Very similar to this is actually Cardano, by the way, a long time ago, but almost identical to Casper. Most of the world looks at the moving average one. So you got the 200-day moving average, which will be slow, and it's when the 50 comes up like that. The internet calls it the golden cross, which in the short term, it's actually a bit of a fade because you see that happening. The market tends to sell off a bit, but then over the next year or so, it's a bull market, typically. 16. So I only put this in here because it's quite handy to know. When people go, oh, yeah, I'm not going to get into CAS now because it's already done a 2x over the last couple of months or whatever. Then I go, well, what about Bitcoin? Do you buy Bitcoin? Yeah. Well, Bitcoin's price discovery is 10 cents. So whatever the price of Bitcoin is so if it's $40,000, that means it's gone up roughly 40 million%. So the actual answer is 39.99999 million%. So people are more than happy buying Bitcoin right now, aren't they? Even though it's already gone up roughly 40 million%. So when Bitcoin goes up to 100K, it would have gone up 99.999 million%. It's nuts, isn't it? So we're very early with a lot of other assets out there. Which on-chain metric provides best insight into overall network activity? And that's active addresses. Because people are coming on, they're being active, they're buying and selling, interacting with smart contracts. Blockchain scalability, the correct one is BPS. Everyone focuses on TPS, but the real way to scale, and I think I mentioned this on a previous trading pub where I was talking about a garden hose and building a river. Yeah. How many Satoshis and one Bitcoin? 100 million, yeah. So yeah. You'll be surprised how many people still believe that you can only buy one whole Bitcoin. So many. It's too expensive. It's 40K. I don't have 40K. Okay, we'll just buy £5 worth. Well, you can't. Yes, you can. You can buy £5 worth of Bitcoin if you want. Average cost of a Casper transaction, 0.000. So here's the cool thing. I once sold two things actually. Sorry, yeah. I once moved, was it $3 or $4 million worth of Casper from one wallet to the next. I had both screens. I had an existing wallet and a new wallet. I was draining the old one. And by the time I pressed let go of the mouse button, the $3 or $4 million worth of CAS was instantly in the next wallet. Literally, as I lifted my finger up, it was already on the other screen. And the transaction fee was $0.0002. And that is the average fee for Casper transactions. It's absolutely amazing. Try moving a couple of $1 million from bank to bank. It will be held up for a week. You'll be treated like a terrorist. And you'd have to provide bank statements and source of income and... Yeah, for CHAPS payment. Yeah. It's crazy. And it wouldn't have settled for it's T+3 for normal bank transfers and stuff. Yeah, crazy. Primary difference for layer 1 and 2s. So layer 1s are typically the settlement layer. And layer 2s are the scaling layer, typically. So that's why we have lots of layer 2s on Ethereum, because it sucks for scalability, ETH. That's why I have Arbitrum and Optimism and all the others out there. And I guess this helps you understand what the Lightning Network it does for Bitcoin. So let's say all of you wanted to trade in Bitcoin. It's going to take roughly 15 to 20 minutes for your Bitcoin to go from wallet to the other, etc. Whereas, let's say I was a shop and all of you are buying stuff from me, it would just take far too long. So what the Lightning Network does is it creates little nodes. So let's say you are a table and you're constantly dealing with me or whatever. What could happen, the Lightning Network effectively creates like a little sort of sub-ledger, and you guys can transfer and deal with each other or buy stuff from me, etc. And at the end of a certain period of time, it will go, right, what was the actual difference? And then, oh, so you need to give me $5 or whatever. So you could have traded 100 or 1,000 trades, but at the end of whatever time period, it'll be like, right, what's the actual difference? Then we settle that difference on the actual base layer, i.e. Bitcoin. So that's why Lightning Network is, super fast and almost instant, because you can, it's basically off-book transactions and then you're just settling up, just like the banks do every night. But I predict, and I've said this before, but I'm going to have this on proper video right now. I have a very strong probability, in my opinion, I would say a 90% chance that there will be a major Bitcoin Lightning Network hack. Because Bitcoin itself cannot be hacked because it has SHA-256, but the Lightning nodes, they are dodgy as F. So there will be a major Lightning Network node hack, and someone will lose millions and there'll be massive outroar. But it's not Bitcoin's fault, it's the Lightning Network's fault. 22, in other words. Up or down? Yeah, and so it's a bit of a rising compression-ish. You're sort of trying to anticipate a double top there within the downtrend, and it's just, continuation. I think that's Coty. 23, Byzantine generals problem. So this is an issue that every crypto faces, and it's understanding how you can communicate within the protocol and not being able to know what everyone else is doing or thinking. So so D is the answer. So it's a problem of coordinating actors in a decentralized environment. And the reason why it's called the Byzantine generals problem is because back in the old days where communication was dodgy, let's say the Byzantines are sieging a city, a walled city, and you've got 4 chunks of your army all around it, the northern quadrant, the southern, the eastern, western, etc. And the only way to crack into the city is if all 4 quadrants attacked at exactly the same time. But how can you guarantee that all 4 generals will all agree to do the same thing at the same time? You have to be able to have a signal to all 4, and you have to know that there's not someone listening to signals or someone intercepting the signal. So you've got to send, if I'm the main general, I've got to send 3 horses out to the other generals to attack at midnight, right? How do I know that all 3 horses got there to the right person at the right time? You don't know. So that's the Byzantine generals problem. You have the same thing with crypto. And that's why some cryptos you'll see it has BFT, so Byzantinian fault tolerance, and stuff like that. So 24, gwei is another word for gas. So it's just the ETH version of gas. So a fee required to conduct a transaction or execute a contract. And gas is basically the fuel that you put in a car. Like if you're calling a taxi to take you somewhere, the taxi is the contract, the gas is the diesel you put in the taxi to take you there, or the fee you give to the driver. Sharding is a shitty way of scaling an inadequate blockchain. Cardano. If you build a shitty car that can only go up to 30 miles an hour, and you're trying to make it go faster by chucking out the chairs and removing weight and doing all sorts of bodge tape, it's not an adequate vehicle to get you fast enough. And so what happens is when you set up a crypto where the blockchain just grows and grows and grows, and that every transaction, every node has to maintain a massive ledger, like the Bitcoin ledger, ETH and Cardano, like it's so hard to scale. Like if 1 billion people started using it, it just wouldn't be good. So they come up with these bullshit bodge tape things called like sharding, and there's a few other bits and bobs. And sharding is like, oh, what we're going to do is we're going to flag post chunks of the blockchain. So from now on, boom, we're going to flag post this chunk. So now everything's up and corroborated up to this point. Cool. We're going to draw a line in the sand. Everyone can forget that. From now on, the blockchain that will only go through is from here to here. So you're basically sharding up, chopping up the blockchain into smaller bits, so it doesn't have much data requirements for each node. It's just shit. Any crypto now that I see that has sharding, I know that they're bodge taping a shit protocol. There's no point. It's easier just to kill the project and fork what Casper's doing. Like, yeah. What is the primary purpose of a consensus algorithm? So this, aligned with the Byzantine generals issue, is one of the biggest problems. You need to know, can you talk to each participant in a decentralized environment safely and securely? But also, when something goes on the blockchain, you need to confirm the validity of that transaction, so there's not double spending. So yeah, A. How can people come to an agreement on something and you don't have to trust each other? And this, combined with all of the other stuff, is also very important. A cryptographic hash function basically ensures each block is linked to the other. So no one can come in and put a malicious block in and try and basically fork the blockchain. And so this is why the hash functions are important. Expectancy, we all know it's the top one, hopefully by now. Now, the last two questions I thought were more applicable to real life. And I do this on a daily basis in real life. Whenever you come up with two decisions, I try and come up with the expectant value of each decision. And then I always take a statistical choice. And it's hard sometimes, because I spend most time trying to attribute an expectant value on a particular decision. So here's the thing, you've got 4 scratch cards here, and they all tell you what it's going to pay you. And I didn't see any of you pick up a calculator. Or I was watching your tippy-tappy thing, seeing if you'd open up a calculator. The way that you do this is, okay, first of all, 65% chance of winning 120 grand. So 120 grand, you times it by the decimalized version of the percentage. So 65% is represented as 0.65. So 0.65, 78k. Okay. B, 12% chance of 650. So 650k times 0.12, 78 grand. They're the same answer. Yeah. 20% chance of 500k. So 500 times 0.2, 100k. And 90% chance, 95% chance of 90k. So 0.95. 500. So the highest expectant value is C. But, big but, if you only had one scratch card, one opportunity, you should not pick that one. Would you agree? Which one would you pick? Yes, thank you. That is what, if you had one option, one thing. However, if you're in a trading environment where you have endless opportunities, not just one option, but hundreds of options, you should not pick D. No, well, actually, if you had a system which was 95% accurate and it still had positive expectancy, maybe, yeah, that's not a bad one. But if you really wanted to see which trading strategy actually made you the most money, and you had an endless supply of choices, it would be this one all day long. Because you have a 1 in 5 chance of striking it big, and then you have to look at variance as well.